Most traders lose money because of entering at the wrong time. Most traders also lose money because of their entry urge is not refined. And most of all, most traders lose money because of not having a strategy. In this video, I'm going to be giving you guys my nature approach towards how I approach the market and how I go to about taking my trades and the times that I do it, the patience that's required. If you are new to this channel, I am the GOAT Andy Zoy, and I've been trading for the past 5 years and also made above 500,000 in payouts ever since the past 4 years I've been trading prop firms. I've built a very good name for myself, and in this video, what I'm trying to show you guys is very valid, is very solid on my strategy, also on how I managed to merge spot money concept together with price action and how together they've become so powerful in making my strategy properly refined. Without any further waste of time, let's get to it. Moreover, everything to start with, guys, I only trade 6 instruments. That's the only thing I trade. The main reason I had to cut down, if you go back on my previous videos, you would notice that I was literally trading everything. But right now, the main reason I cut down the number of pairs, metals that I trade is mainly because I am trying not to over focus my attention on many things, but no on these specifics that have been working for me quite a lot of time. Because what I picked up was I actually went back on my drawing board and I had to mark down what pairs, what metals have made me profitable, or which pairs do I make most money from. And then I came across the fact that I make a lot of money from gold, Euro USD, GBP USD, USD JPY, GBP JPY, and Euro GPY. And just to top it up, I also mastered trading Bitcoin. So that is the main reason I ended up chopping down the number of pairs I trade. So let's start first with the dollar index. So guys, the main reason before I go to about my trades, especially when it comes to Euro USD, GBP USD, gold, USD JPY, it's mainly because DXY is a guideline to understand what are the chances of us selling and buying, because it focuses mainly on the dollar index. So if I know that the dollar is going to be bullish, it kind of highlights me that maybe anything XXX USD is going to sell, anything USD XXX is going to buy. So it's more like a guideline towards me being able to trade the market on these 4 pairs that I've mentioned. But first things first, guys, one thing I've came to merge was, in as far as I'm a price action trader, I also aligned it with smart money, or rather ICT, because these 2 other strategies have allowed me to kind of understand how the flow of money works out. And now when I combine it together with the type of trader I was, which was a price action trader, everything just skyrocketed my profitability to the maximum point that right now I'm actually sitting at above 500,000 in total payouts from different prop firms. So now let's go in a little bit deep to us for you guys to understand how do I go about actually using this strategy. So first things first, the main reason, if you look at the market right now, the first thing I need to determine on the dollar index is where are we structurally. So with the structure, the first thing I'm picking up is we can see that from here to there, that's an impulse. This is the entire correction. What we understand from price action is that this is forming something in nature of an expanding channel. So an expanding channel is when prices are expanding towards the end of the pattern or structure. So far, if we look at this was an impulse, and this is creating a larger version of a correction. So if I focus on my strategy, so now first things first, we notice this. One thing about what merging my strategies has taught me and mastering money is understanding discounted prices and premium prices, as well as when is the right time to enter and when not is the right time to enter. But in this case, let's just see where does actually dollar index takes us, so that when you go down to other pairs, we are able to see it. So the first things I see first from this impulse is this is a larger version of a correction. I'm picking up that there's a lot of prize money that was left somewhere right about here. This is part of what smart money has taught me, that the market cannot impulse without coming back to create prices on the fair value gaps it has actually made. For an example, we're looking for something in this type of nature. Hypothetically, the market impulses towards the downside and maybe starts correcting towards the upside and impulses again. One thing you must realize is at this moment in time, somewhere right about here, there's a lot of liquidity that's lingering. Also right here, there's a lot of liquidity that's lingering. So we might expect the market to want to maybe take out this fair value gaps first before it gives us a drastic impulse towards the downside. We're going to make that practical, especially when we get to the pair side. So now let's see something. One thing I'm picking up from here is this is our fair value gap somewhere right about here. So if we take prices from here, take it to there. So how is this determined? You take prices from the previous high, the previous highest high, to the previous lowest low. So at this moment, we have this as our highest high on a daily time frame. We have this as our lowest low because there's no price below this, there's no price above this. And this only happens because we are currently in a bearish market. So if we can look at it, the market actually, when we pull this from here to there, when we pull this from here to there, you're gonna pick up that as soon as the market impulsed towards the downside, started trickling towards the upside, came back, retested. So until it got to this level moment again, whereby it has now fulfilled the fair value gap that was left lingering around here, this is where the market started impulsing quite nicely towards the downside. But fair enough, let's go on a 4-hour time frame. When we go on a 4-hour time frame, I'm gonna also guys show you something. So since we have already seen, it is also wise for us to look at how the market has been moving on the current price. We can't cheat the fact that this is an impulse move towards the upside, right? And so far the market has been good in creating lower highs, higher highs and higher lows, higher highs and higher lows. But now with price action, taking this price from here and putting it right there, taking this right here, putting it right there, we're gonna pick up that the market has actually now changed prices, whereas in smart money or ICT is mainly named as change of character. So in the price action world, we might regard this as a head and shoulders, right? In price action, this is regarded as head and shoulders. As you can see, this is the the left shoulder, this is the head, this is the right shoulder, and then we're dropping down. But I can't cheat the fact that the market has been impulsive towards the upside. This means I need to check where does actually liquidity is, where does resting liquidity is at the moment. So I'm gonna take my Fibonacci retracement, of which I have its settings, and then if I put it right there, we're gonna pick up something of this nature. Current moment, the market fair value gap has been here because prices has never been triggered. And when you look at the current price happening right here, you're gonna pick up that the market has now started changing characters towards the upside. But how do we confirm that? Let's go on a 1-hour time frame. So going on a 1-hour time frame, I'm only going to mainly focus on the current price that's been created. This is a moment where we're going to see how the market actually will be moving in the next coming few times. So for an example, we already know that in price action we have what we call a double top and a double bottom. At the moment we are currently facing a double bottom. Why do I say that? Because remember, for a change of price, according to price action, the last price movement has to either be corrective towards the downside, especially when approaching a strong level, which might be the supply or the demand. At the current moment, we are approaching the demand, of which that's why prices started now changing their legs towards everything. So what we are noticing here is we might possibly be having a change of character right here, but we can confirm it to be a change of character because prices are still spiking. We don't have yet any price that's actually being a closure above, but maybe this is created. Let's go on a 4-hour time frame. Maybe we might see something different. Okay, so according to a 4-hour time frame, this is just a spike into price, so which we have to wait for the market to open on Monday in order for us to know whether this will be a change of character or this is just a spike into price action. But according to what's actually happening, this is a double bottom, and we know that a double bottom, according to price action, that's a price reversal. So we are expecting prices to at least push until maybe let's focus on this price right here. So this price, we can see we've been having break of structures towards the downside. We've been having break of structures towards the downside. This means the continuation is actually on the downside. And the last price that was created was, this can be the break of structure. And then right here, I may take this as a wipe of liquidity. The main reason is the market had to go back to wipe out liquidity to gain power to drop until here. So the fair price to look at the market right now would be, if we take our Fibonacci retracement from this lower high to this lower low, is that the market obviously broke structures right here. The previous high is this one, the previous low is this one. So now what we need to determine is where the price fair value gap is actually lingering, which is lingering right here. And it's if I take my gen box, this helps me to gauge where premium is and where discount is. So let me explain what a discount and premium. So a discounted price is when the market is when your stop, to make it sound simpler, is when your stop loss is going to be bigger from where your risk might be taken. For an example, if I enter my sales below here because we are on a selling momentum, we're on a bearish market, then I'm risking a lot because there's a higher chance that the market might want to push and take out this high right here before it actually starts dropping. But then there's a lower chance of me risking high if I wait for the market to come on discount and then put my stop loss right here, because if now the market decides to push up, the stop loss won't be big. But if I enter my sales right here, the stop loss or the risk will be big, which will lead me to probably losing partial of my money unnecessarily. And then on the bullish market, how it looks like would be the discount price will be below the 50% and the premium price will be above the thingy. So right now we're not gonna focus on that so far. Let's just focus on what we're looking for in the dollar index. So for the dollar index, guys, I don't want to lie to you, I'm expecting prices to push at least high before they can actually start going low again. So this means I'm expecting the dollar index to be strong, right? I'm expecting the dollar index to be strong. So we're gonna firstly start with gold. Guys, I don't want to lie, gold, it's been very impulsive towards these days. So it's pretty much hard to kind of determine where gold might be or where gold might not be. Because if you look at it, we've been breaking structures towards the upside. This means we've been continuing so well towards the upside. So at this current moment, we're going to look at the current price, which is this one, right? So the current price, which is this one on daily time frame, we could see that the market has actually broken the structure and started impulsing. Let's go on the 4-hour time frame. On the 4-hour time frame, we could see that the market has also been creating higher highs and higher lows, higher highs and higher lows. So according to what's been happening on the dollar index, it brings us further to maybe calculating our price from here to there, because this is our previous low, this is our previous high. So if I take my Fibonacci retracement to here, right? That's the first part. So since we are going bullish, what we're going to be noticing is that if I take my gen box to scale where the premium and discount is, imagine if I was to take my buys right here. It will be vague because the market has a chance of selling until it gets here. But then if I take my buys right here, this is now a discounted price. So right here is a 50% premium. Right here is a 50% discount. So the main reason they're called discounted price is because the risk is low when you take it below the discount, on discount. But if you take it above, then now it's expensive. That's why it's called premium. So hopefully that makes sense, guys, to gauge your premium and discounts so that you also know how they work around. So far, I'm going to look at, since the dollar index said we're going to be bullish and we're going to maybe turn somewhere around about in order to go back again down, I'm also assuming gold, we also has to expect something of this nature where the market pulls back down before it actually starts creating other impulsive moves towards the upside. Because also, fair enough, the fair value gaps are left around these areas. The fair value gaps is left around this area because the market has been impulsing towards the upside and there's a lot of pricing left from just this impulsive leg and we're not respected. So let's go on a 1-hour time frame. Maybe it might confirm something different. So on a 1-hour time frame, you can see that according to price action, we have just recently experienced a head and shoulders. So this is a small version, left head, left shoulder, right shoulder, impulse towards the downside. So fair enough, it's fair to say I'm also looking at this market right here according to Smart Money or ICT. This is a change of character, so it shows that we are now starting to change characters. So this means the market impulse towards the downside, it wicked out at this current price level, right? As it wicked out at this current price level, we know that there's some value gaps that are left somewhere about this level. So if I take my Fibonacci retracement from here to here, I may figure out that at this current moment, which is right here, this is where gold might start selling and maybe start creating those lower highs and lower lows, lower highs and lower lows. So fair enough to say we're going to be looking for selling opportunities towards gold. And bear in mind, my entry model, I wait for prices to tap in the market unless I've already set my orders. So let's go to another last price in order for it to make sense. Now we are looking at Euro USD. So fair enough, guys, one thing I'm going to tell you is I'm not going to start this one from scratch. The main reason is because I'm in this trade as we speak. So what actually had happened was I went on a daily time frame. Obviously, I need to understand how the market is moving and what's actually going on, right? So looking at the market, we could see that we had an impulsive leg from here. We had an impulsive leg from here to there, right? And then now we are starting to move correctively, similarly to how the dollar index is moving. The only reason is because this is now a pair and no longer the the dollar index. So now let's gauge with our Fibonacci retracement, how far did this thing happen? Fair enough that the market didn't actually get as far as it could have gotten, which is the fair value gaps right here, but at least it completed the 90% of the value gaps that were left around these areas. So now if we go in the current market price, one thing I love also determining is also realizing that we had a liquidity sweep right here, which was also confirmed with the double top that we experienced right here. And then right here, we also had a break of structure. So this means what created this, this high created right to this low. So this means this is now currently the highest high. This is now the lowest low, right? So that's when I took my Fibonacci retracement from this level right here to there. Bear in mind, I'm only gauging price according to structure in order to make sure that I understand where the market would turn and where not the market would turn. Bear in mind, guys, the strategy refinement is very important. You have to know how to refine your strategy in order to become a better trader. We grow every day. This is the main reason why I managed to combine price action with smart money and ICT and form one thing. So we're gonna go on a 4-hour time frame. So now we know we have a larger version of a break of structure and a liquidity wipeout. So now on a 4-hour time frame, we can realize before this market movement happened right here, we can determine that according to price action, as I said, the price change somehow from here, you could see that this was an ascending structure. An ascending structure is a reversal pattern, right? An ascending structure is a reversal pattern. It shows that the market will be soon turning. And what confirmed the reversal even furthermore? It was the double top that we had on the fair value gap formed on a daily time frame. So on the daily time frame, when we went to respect the fair value gap, the market managed to actually also create a double top on a 4-hour time frame, of which it is more visible on a daily time frame. If you can look at this on a 1-hour time frame, this is an ascending structure. Within the ascending structure, according to price action, we know something we call trends in trends. So inside also this ascending structure, there was a trend formed inside that led to us having a double top formation and the market impulsing towards the downside. And as soon as the market impulsed towards the downside, this was my fair chance to actually see the potential of what the market might do. With what we're experiencing right now, I'm in this trade. The first take profit was hit. You can see in the pop out in the screen right now. And then right now, I'm also realizing something. We had a liquidity wipeout according to the daily time frame, which is here, right? And also here, we kind of low-key experienced a break of structure. So this possibly means the market might have a chance of pushing even further down, more over everything. And I love the fact that we having that idea, because if you remember something, this is now a change of character. If you remember something, we are experiencing bullish momentums on the dollar index. So we might expect the market, maybe the market might push a little bit down come back to respect some fair value gaps created around these areas, and then start dropping furthermore. But where am I expecting the market to turn? I'm only expecting the market to turn, especially at least if it respects from this level to that level right there. So the market might have a higher chance of dropping from here to there. So my strategy pretty much requires a lot of patience. That is why you can't just be excited and just throw yourself into trades and all of that. No, you have to be patient. You need to understand price action in order to determine price levels according and understand money. So that's how simple the strategy is. So I'm gonna go on the last pair, which is GBP USD, and also similarly on GBP USD, it is the same thing. You need to understand prices first before you can actually move. As you can see, when I went on a thingy on a daily time frame, we had an impulse from the downside to the upside, and the current price, what it's saying is also the vice versa what Euro GBP USD is saying. And then as you can see, we were experienced, the last leg was an ascending structure, and on a 1 hour scale we have currently now changed characters. So as you can see, this broke this structure right here, which symbolizes a change of character. So the market actually, we had a body close below, change of character. So we might be experiencing the market continuing towards the downside in the weeks that are coming very soon. So it's pretty much simple with my strategy. As long as you understand price action and smart money and combining them together, it is pretty simple. I also have, guys, my coaching lab. My coaching lab is where I'm literally going through this every day with my students, all the time with the people I'm actually trading with on my coaching lab. The link will be on my description. Go click it, use launch 70 to actually get a 70% off discount from our subscription on our coaching lab. I can't wait to see you on the other side. Much love, peace and happiness. This is your boy the GOAT, and these are champagne.